What's up guys, Dr. Ryan here with another episode of Smashing Wealth. In this episode, we're going to discuss some of the biggest misconceptions of the next stock market crash. I will be breaking down each crash market indicator and how it can contribute to an upcoming stock market crash. We will be going over in detail the impact negative interest rates, the Fed's buying up corporate bonds, the possible new stimulus package, upcoming mass evictions, and inflation has on the possibility of another stock market crash. We will take it a step further and help you identify why the failure of the bigwigs in Washington to come up with an agreement can send the stock market into a steep free fall. I will be breaking down the facts on why the next stock market crash is imminent. This video will help you crystallize the dynamics in the market which are leading up to a stock market crash. I will also be sharing my stock market crash predictions with you. By knowing why a stock market collapse is coming and by properly preparing for it, you can exponentially increase your wealth through well-timed investment decisions. If you stick around to the end of this video, you will have a strong grasp on what stock market crash indicators to look out for and how to interpret them. This video will be all about the stock market crash explained, so let's get into it. Now, the Fed has promised to keep interest rates low in an effort to boost the economy and the stock market. They're aiming to keep the interest rate close to zero. This is true, but to be honest, taking a look at what's going on right now, I can see interest rates going negative. This would make borrowing money cheap and saving money expensive. If interest rates become negative, this can have a profound effect on you as an investor. First off, you would start to pay a fee just to keep your money in your bank account. Super weird, right? Your bank account would no longer pay interest. This means that you would be charged to keep your money in the bank. This encourages people not to save, but rather to spend their money. A negative interest rate would also mean that if you took out a loan from a bank and borrowed money, the lender would need to pay you to do so. Right now, when you borrow money, you end up paying more money than what you borrowed in the form of interest. With a negative interest rate, you wouldn't pay any interest on what you borrow, and instead the bank would pay you. Imagine going out to take out a loan and your net worth goes up as a result of it. This would mean that you would get paid to take out a loan and you would be charged to save money in a bank account. Yes, this is possible and very likely in my personal opinion. The whole point of having low interest rates is to stimulate the economy. By dropping the interest rates on loans, people are more likely to take out more loans and spend more on their credit cards. This causes a boost in consumer spending, which helps the economy as a whole. You don't need to take a stock market crash course to realize that there is only so negative they can make interest rates to help a struggling economy. There are limits to how negative interest rates can get. Negative interest rates can only boost the economy by so much. There is a limit to the amount of support negative interest rates can provide. This means that negative interest rates may just be delaying the inevitable market crash. It was all over the stock market news that the Feds are supporting companies through the purchase of corporate bonds. With this being said, there are significant limitations to what the Feds are doing. First off, there are limits to the funding of their bond purchasing abilities, which means that they have to be selective on which company bonds they choose to purchase on the secondary bond market. Second, they are only investing in bonds that will fully mature in less than 5 years and meet other investment rating specifications, which a lot of companies don't meet. As a result, they're unable to support a lot of companies that exist in the United States. The excitement in the stock market and upsurge that resulted from the Feds pouring money into ETFs and the secondary bond market is just that. Excitement meant to restore investor confidence in the market. Since there are specific restrictions put in place on what they can or cannot invest into, there are limits on how much they can help. As part of my stock market crash 2020 predictions, I can see the funding for this program being finite, which thereby means that there are limits to how much and how long they can keep the stock market up. Eventually, the market may be left to slide right back into a stock crash. In this stock market crash explained video, we wouldn't be doing it any justice if we didn't speak about the status of the upcoming stimulus package and what it means for the stock market crash today. There is a deadlock on unemployment assistance. We're talking about the $600 weekly stimulus check that was allowed to lapse. This now means that millions of Americans just had their income substantially cut. The worst part is that the two sides in DC are struggling to reach a deal. The first time this unemployment assistance was passed, there was massive pressure on both sides to get it done. This time around, there seems to be little to no urgency. Even if a stimulus package gets passed, it appears that the previous $600 weekly unemployment payment may be cut down to a lower amount, or the income threshold to qualify may be lowered. This has created a situation where millions of Americans have had their funding to pay for bare essentials like housing and food cut. This will create a situation where people are more focused on surviving than investing. They will end up cutting out non-essential spending in their life. This will cause decreased consumer spending, which causes company profits to decrease, and this forces companies to lay off more workers, which further cuts consumer spending, and the cycle continues. There is no indication of when a new stimulus package will be passed. Until then, millions of Americans will be left in limbo. When people feel insecurity in the future, that's when they tend to tighten up their spending, which can lead to another stock crash. The laws preventing evictions have come to an end in many states. There are at least 30 states now that tenants are not protected from being evicted. This means that landlords can start the eviction process with renters who default on their rent payments. I have personally seen marches against eviction start up around my area. This can lead the homeless rate in America to skyrocket. I'm talking about millions of additional Americans being homeless. This can become a huge problem as the homeless rate goes up. The economy as a whole will go down. This can become a major contributor to a second stock market crash. When people are at risk of losing their home, they'll be forced to dip into assets that are normally off limits. You'll see people that start to liquidate their 401k accounts through their employer just to get their hands on some more cash. In hard times, they'll take a loss by paying a penalty and taxes on pulling money out of their retirement account in order to have enough money just to get by on. When I did a stock market analysis, I quickly realized that most retirement accounts are invested partially in stocks. It is a stock market basics that when these retirement portfolios start to be sold off, will lead to stock prices falling across the board, which can lead to another stock market crash. If the government steps in once again and prohibits evicting tenants who are unable to pay, this will adversely affect landlords who depend on rent payments to pay the mortgage on their properties. If these landlords default on their mortgages, this can lead to a housing crisis across the country. A housing crisis can push wealthy investors into financial ruin, who in turn would pull their assets out of the stock market in an attempt to keep themselves and their properties afloat. In my stock market analysis, a mass pullout by wealthy investors can cause another market crash. I can clearly see this stock market crash coming in the very near future. It is all over the stock market news that the government has already printed trillions of dollars to stimulate the economy. This has the effect of devaluating the existing currency. This will cause major inflation levels. This means that the money you have today will be worth less and less. Major investors have been putting money into the stock market in an effort to avoid inflation. This has drastically pumped up the market. I believe that when investor fear kicks in, investors will start to sell off their stock positions and convert their wealth back into cash. Cash will then experience a further devaluation through inflation. Investors don't want to experience a stock market crash live when they're heavily invested in equities in the stock market. The fact is, even if the market dips, it does not need to dip to stock market crash 2020 levels to be considered a bigger stock crash. Our money is worth less than it was worth in the past. If we got all the way back down to stock market crash March 2020 levels and just matched these levels, this would be considered a much bigger stock crash. What a lot of investors fail to realize is that by pulling their money out of stocks and putting it into cash, they may still end up with a net loss as the buying power of their cash sharply declines through inflation. I believe that we will see a sharp decrease in spending as we head into the later months. The gravity of the condition of the economy will start to set in as people don't get the kind of unemployment assistance that they were getting previously. It is all over the stock market news that things are not looking good. As people get more and more scared, they'll cut their spending to the bare minimum just to get by. This will cause a reduction in the country's GDP, which means that stock prices will be more overvalued than ever. If we examine the stock market today, you will realize that most stocks are already overvalued. You don't have to read a book on Stock Market for Dummies to realize that sooner or later there'll be a major correction as stock prices fail to get back in line with proper evaluations. This can lead to another stock market crash 2020. I have already created another stock market crash video that goes into extensive detail on why the stock market crash is almost here. I will link to that video in the the upper right hand corner of this video. I'll also link to it in the description section below. Question of the day. Do you believe that the stock market crash is coming? Drop a comment down below in the comment section of this video and let me know. If you made it this far in this video, please consider smashing that subscribe button and turning on the notification bell to be alerted when I release future videos. I highly recommend joining our mailing list by going to smashingwealth.com. This way you'll be the first to know when I release new videos in the future. I left the link to join our mailing list in the description below. Obliterate that like button if you're feeling generous. Feel free to share this video if you felt that this video helped you learn why we are expecting a stock market collapse. You can also hit that save button and bookmark this video to come back to this video later. Feel free to follow me on Instagram and Twitter at RealDrRyan. Don't forget that Robinhood is giving away one free stock just for signing up for a free account. Make sure you claim your free stock from the link in the description section of this video. Webull is also giving away 2 free stocks. You get 1 free stock when you open up a free account. If you deposit $100, Webull will give you another free stock, with this one being valued up to $1,400. You can claim up to 3 stocks for free from the links in the description box below. That is free money in your pocket. Let me know which free stocks you get in the comment section. I hope you enjoyed this video on the stock market crash coming soon. Thank you for your time and support. This is Dr. Ryan. Until next time, have a smashing day.